Today's financial market update, the most important market insights and investment ideas you need to know. Market sentiment is bullish, mild. Market is performing well across major indices. Index performance: S&P 500 at 0.22%, Dow Jones at plus 0.21%, Nasdaq 0.29%, Russell 2000 at 0.43%. Sparkle Technology surged by 152.56% post-product launch, while Power Operations Management plummeted by 85.88% due to operational issues amid neutral market sentiment and mixed earnings. Investor confidence in innovative tech is rising, while risks in energy investments are highlighted, leading to a cautious market sentiment that requires careful stock assessment. Allocate part of your portfolio to promising tech stocks like Sparkle Technology, while cautiously investing in stable energy companies, and diversify to balance risk and stability. Riverside County Board plans a 3% increase in trash collection fees for unincorporated areas effective July 1st to address rising operational costs due to inflation. The proposed fee increase highlights rising operational costs outpacing revenue amid inflation, reflecting broader economic trends that may influence consumer sentiment and future pricing strategies. Invest in waste management firms with diversified services to enhance profitability amid inflation, and consider ETFs or mutual funds in infrastructure and utilities benefiting from rising operational costs. Millicom's Q4 2025 EPS rose 15.7% to $1.50. Regions Financial reported $539 million net income with 62 cents EPS for Q1 2026, while Steris missed estimates with 2.83 cents adjusted EPS despite a 9% revenue increase. Millicom and Regions Financial show resilience in some sectors, while Steris's mixed results caution investors in healthcare, highlighting the need for selectivity amid diverse earnings reports. Increase exposure to financial stocks like Regions Financial and monitor Millicom's strong EPS while exercising caution with tech investments and diversifying into sectors with better earnings momentum. Consumer confidence is recovering with increased spending. The tech sector is growing despite layoffs, biotech stocks are surging, and oil prices have risen by 2%, reflecting market volatility. Rising consumer confidence and biotech stock gains indicate growth potential, while tech sector resilience suggests innovation persists, though geopolitical tensions may threaten market stability. Diversify portfolios with resilient tech stocks and innovative biotech firms while monitoring oil price trends for potential energy stock opportunities amid geopolitical uncertainties. The effective federal funds rate has stabilized at 3.64 since January 2026, reflecting a cautious Fed approach to support economic growth and manage inflation after a peak of 4.33. A stable EFR at 3.64 indicates the Fed's commitment to economic stability, potentially enhancing investor confidence, though inflation risks may lead to future rate hikes and investment uncertainty. Consider boosting investments in consumer discretionary stocks and sectors like real estate and utilities, while monitoring inflation-sensitive assets to hedge against potential rate increases. Strong corporate earnings and substantial investments in the memory sector reflect robust demand, but ongoing tech job cuts raise concerns about economic stability despite positive GDP forecasts. Strong tech earnings indicate economic recovery and increased investment in technology, but job cut threats create caution among investors due to underlying vulnerabilities. Allocate part of your portfolio to tech stocks with strong earnings, explore high-growth memory sector companies, and diversify to mitigate risks from potential job losses in tech. Oil prices rose 2% amid U.S.-Iran tensions, while gold and silver prices climbed, and Saudi Aramco reported a 25% profit increase by diversifying exports. Rising oil and precious metals prices signal increased geopolitical risks and market volatility, while Saudi Aramco's strong profits reflect adaptability that may impact global oil supply strategies. Increase oil investment exposure for profit potential. Explore gold and silver ETFs for market protection, and monitor Saudi Aramco for insights into oil market trends. Major tech companies are laying off workers amid AI-driven restructuring, while strong earnings boost investor confidence despite rising geopolitical tensions affecting currency and market stability. Ongoing layoffs reflect a shift towards AI in tech, while positive earnings suggest resilience. However, geopolitical tensions may cause volatility, necessitating a diversified investment strategy. Invest in AI-focused ETFs or stocks for growth, monitor currency pairs for geopolitical impacts, and consider defensive assets to hedge against market volatility. Ukraine is recruiting ill individuals for military support, Iran has seized an oil tanker, and Saudi Aramco's Q1 profits rose 25% due to increased global oil demand. Ukraine's recruitment of ill individuals may indicate military instability, while Iran's tanker seizure could disrupt shipping and oil prices, contrasting with Aramco's profit surge, suggesting energy investment opportunities. Diversifying into defense stocks and monitoring energy stocks, particularly those linked to the Strait of Hormuz, alongside investing in oil-focused commodity ETFs, may yield growth amid rising geopolitical tensions. Rising tensions with Iran drove a 2% increase in oil prices, while Saudi Aramco's Q1 profits surged 25% amid uncertainties impacting energy supply chains and market stability. Rising oil prices and Saudi Aramco's profit growth suggest investment opportunities in the energy sector, but ongoing geopolitical tensions warrant caution due to potential market volatility. Allocate part of your portfolio to strong energy stocks like Saudi Aramco and energy ETFs, while monitoring geopolitical developments for potential trading opportunities and risk adjustments. ByteDance is set to boost capital expenditures by 25% to $30 billion for AI investments through 2026, amid strong earnings from Intel and AMD and a resilient Chinese economy. ByteDance's AI investments and positive earnings from Intel and AMD reflect tech sector growth, but layoffs and geopolitical tensions may create volatility, urging investor caution. Diversifying into AI stocks and monitoring tech earnings while hedging against geopolitical risks may enhance long-term portfolio growth and mitigate potential market downturns. Viridian Therapeutics raised $359 million through convertible notes and equity. Hilton issued $1 billion in senior unsecured notes for debt reduction, and U.S. Bancorp is offering $22.49 million in medium-term notes. Recent corporate bond issuances indicate a drive for capital amid economic uncertainty, reflecting varying credit risks and signaling market confidence or caution influenced by inflation and borrowing costs. Diversifying your bond portfolio with new issuances and evaluating issuer credit quality is crucial amid rising interest rates and inflation, as these factors affect yields and investment attractiveness. Major tech layoffs at Amazon and Meta are raising concerns about commercial real estate investments, while Roundhill Investments' Memory ETF shows strong investor interest with over $5 billion raised. Tech sector layoffs may reduce demand for office spaces and impact property values, while ETF capital influx suggests ongoing interest, highlighting the need for caution in related real estate investments. Diversify your real estate portfolio away from tech reliance, monitor commercial properties in tech hubs for buying opportunities, and consider ETFs in sectors unaffected by tech layoffs for balanced risk. Apollo Global Management is acquiring Emerald Holding and Questex for about $1.5 billion, while UGI Corporation is launching a $500 million private offering to refinance debt. Increased M&A activity in event platforms reflects investor confidence amid economic uncertainties, while UGI Corporation's refinancing suggests a strategic capital optimization amidst strong market valuations in B2B sectors. Explore investments in tech-focused private equity firms and strategic acquisition targets while evaluating refinancing impacts on market stability and balance sheet strength. Victoria's Secret seeks a tech-savvy director after Mariam Nafisi's resignation, while FedEx and Alphabet Inc. bolster AI integration and investments to enhance their competitive positions. The focus on AI in retail, logistics, and tech investments indicates a significant shift towards automation and innovation, enhancing corporate strategies and potential revenue growth. Invest in AI-driven companies like Equinix and Regions Financial for potential growth, but remain cautious of tech layoffs and market volatility that could impact investment timing. Tech stocks like Intel, AMD, and Micron rose over 10% due to AI advancements, while Roundhill's Memory ETF raised $5 billion, although layoffs and geopolitical tensions may increase market volatility. Rising tech stocks and DRAM ETF investments signal growing confidence in AI, but potential layoffs and geopolitical risks underscore the importance of risk management for investors. Allocate part of your portfolio to tech stocks and the DRAM ETF to capitalize on AI growth while monitoring market conditions for potential adjustments. Roundhill Investments' Memory ETF has raised over $5 billion, reflecting strong investor confidence in green energy, despite facing economic fluctuations and regulatory challenges that may affect growth. The rising investment in green energy ETFs reflects confidence in the sector's growth, while AI advancements may enhance company performance, though economic uncertainties necessitate careful risk assessments. Diversifying portfolios with green energy ETFs and investing in AI-integrated firms while staying updated on regulatory changes can enhance growth and manage risks effectively. Thank you for watching FERPA, your financial Sherpa.